Hey everybody, Steve Ankerstar here. Thank you so much for listening in. Yes, it is Casual Wednesday, and it's kind of Bitcoin Day is what we're going to talk about. Bitcoin ran up to all-time highs earlier today. Since then, it's faded a little bit. But since we do talk a lot about Bitcoin here, I'll just give you my latest kind of take on what's going on. I have my Bitways hat on, and I have my Stack Sats sweatshirt on. So I'm really bullish on the move in Bitcoin. I think it's going to continue, but we will get to that here soon. But as a reminder, it's a financial education presentation. You have to do your own due diligence for acting upon anything you hear in this presentation. More disclosure information is available at anchorstarwealth.com. And the opinions expressed are mine and mine alone. So before we start talking about Bitcoin and Bitcoin related investments, let me share out my screen here. I do want to give a shout out. We did have a happy hour 2 days ago. It was Katie Hubbard came in from Walton Global. Katie's very popular in the industry as far as she's on TV a lot, so you may see that name. So it was kind of our, if you will, our kind of first star power to bring into the in-game lounge. But anyhow, she was talking about a land investment, paying straight 12% to investors. So if that's something that you're interested in, ask your advisor. We can give you the slide deck and kind of talk about that. We also had Sarah Lorza come out. She's a workplace consultant. Been talking with her, and she kind of came out to check our workplace dynamics and culture and things like that. And she gave us very favorable reviews for what we're trying to do here. So, and it was a good conversation. So, you're asked like, what are we trying to do? Well, we're trying to protect and grow your money. That's our mission, right? We also provide rapid response to client concerns. So when you guys reach out, you're going to get an answer either right away, same day, or worst case within 24 hours. And we use the whole staff there. So if one of us isn't available, then somebody else can cover is how we do that. And then lastly, we want to provide that sense of community. So we have a lot of events. We invite you guys to a lot. I don't expect everybody to come out all the time, but certainly if you're available and you want to come out to see any of our speakers, we would love to have you. And sometimes it's just good to see folks face to face. And again, it's always an ask anything environment. We generally have our CPA available, and our state lawyer can make it when he can. So sometimes you can ask those free questions, right? So take us up on that. All right. So again, thanks to Katie and her team for stopping by. Okay, what's going on in the markets? We're having a sell-off today. Largely, if you woke up to the bond yields have spiked. That's what it's talking about real time there on CNBC. The 10-year Treasury is pretty big up on the day, and the 30 years up over 5%. That does change a lot of things in the investing world, and it means markets sell off, and that's what you're seeing. When you really look at the past month in the SPY, we'll just click on that real quick. It's really we've kind of had that huge recovery from tariff Mageddon, if you will, as the narrative switches from tariffs now to tax reform. So it goes from a negative to a positive, and you see the move back in the market. And then yes, remember that markets do sell off. If you look at this chart, it's a 1-year chart. You do see lots of ups and downs. But over time the market's undefeated. It goes up and to the right. So you kind of have to stay strapped in sometimes. So sometimes it's glorious, sometimes it's terrible. But if you zoom out, you'll see that the markets just go up and you're making money over time. All right. Next thing I want to talk about is, here's our holdings. I like to, when I'm doing the show, which isn't that often anymore, I like to show kind of our top 10 holdings. And you know that we're pretty in on Bitcoin. Again, long-term investment. It's a hedge against the U.S. dollar and the current debasement that's going on. Debasement, what does that mean? Well, two things. There's inflation that's naturally baked in. We pride ourselves as a country for 2% a year of inflation. When you think of a decade, that means over a decade, you're losing about 20% of your purchasing power, which is why if you've talked to us lately about retirement, it used to be get to $1 million and that's all you need. Well, $1 million doesn't go that far anymore, right? So now it's more than that, and that's because of the loss in purchasing power over time. It's not a call that the dollar's ending or the U.S. is imploding. It's just an acknowledgement that the dollar isn't worth what it used to be, and we're pretty good at hitting print on the printing press for U.S. dollars. There's, the topic of the day, of course, is tax reform, and the bill, the big, beautiful bill, is being bantered about by those that are experts in that field. But there's plenty of concern that it's going to add to the deficit. political football back and forth. Republicans say it won't, Democrats say it will. Who knows? We'll get to the bottom of it as more and more gets closer to getting passed. But either way, we still have 37 trillion in debt, and that could increase. So those are the sorts of things that we are concerned about. Traditionally you would go to gold for your safety. You can go to gold if you choose. If you understand Bitcoin or you want to learn more about Bitcoin, ask your advisor. But that's kind of the digital version of gold. So it's that long-term store of value to avoid you losing all that purchasing power. So that's why it's so popular. That's why it's kind of running up. I'll switch over to the crypto chart. There's crypto, which I don't really get involved with at all, except for Bitcoin. So I consider those two separate assets in my own mind. There are use cases for other crypto, but Bitcoin is by far the one that's most obvious to me. So therefore, you can kind of see where we're at. It did run up to over 109,000 earlier today. That's the 1-year chart. So you can see, I don't know if I think it hit an actual new high or maybe an intraday new high today, but you can kind of see the move up. And I'll tell you, the move up is because of concern of tariffs causing inflation and then tax reform actually causing an increase in debt, right? Like we're not necessarily adulting as a country, if you will. So there's lots of concerns there. So that's why I think this recent run up happened. I think it will continue. Again, if you see anything, if you're just like, nope, I just don't want this, contact your advisor. It's easy to pull it out of your portfolio if it's in it, right? But if you're a believer, if you say, yes, this is how I want to hedge against, some of the stuff we're doing with the US dollar, then reach out. And there's plenty of different ways to invest in it at different risk levels, right? The BITB is what we use. That's kind of owning the direct asset. But there's some hedged opportunities where there's much less volatility if you are a lower risk type of client, like a moderate or conservative. So just want to pop that up there. Again, it's too much to cover as far as exactly how it works and why I invest in it and that sort of thing. But I certainly want you thinking about it. And if you have any questions, that's why we love for you to reach out to us and ask us. So thanks again for listening in, and we'll talk to you guys tomorrow. Bye.